Good day. This is James from ABSA Asset Management, and thank you all for tuning in for what is the final MPC of 2020. And to believe we are already on the 20th of November as the year draws to a close, and for what has been a rather erratic year in the financial markets, the MPC turned out to be one of the more predictable of the year. Of course, we've seen interest rates cut a massive 3% in total over the course of the year. But for yesterday's MPC, the decision being once again to hold interest rates, which was generally expected amongst the analysts that have been polled and economists, and certainly what the market was expecting. Interestingly, the split between the 5 voting members, 3 members call for a hold, 2 members still calling for a cut. So there is a fine line, there's an outside chance for further easing. But I think, as we've been saying over the last couple of meetings, it certainly feels like interest rates have been cut enough in South Africa, and with the repo rate at 3.5%, the market looks forward to the next move being potentially up in interest rates. But bear in mind, with 2 people still calling for cuts, if the data allows for it and if the economy looks like it needs it, there is still space for further cuts, evidenced by those 2 still calling for cuts. So it would just take one piece of data to swing one of the 3 hold members. So what changed in this MPC? Well, very small adjustments. Inflation marked down in 2020, 2021, and kept static for 2022. But core inflation also marked down, and quite significantly, one might say, in 2021, marked down from 3.7% to 3.4% over 2021. So giving some space there for easing. If you were looking for easing, that opens up the door. Growth in 2020 improves from negative 8.2% to negative 8%, but deteriorates in 2021 down to 3.5% from 3.9 and 2.4 from 2.6 in 2022. So overall, the risks to growth balanced according to the governor, the risks to inflation to the downside. So once again, signaling the possibility of further cuts if need be down the line. So very little change to the output gap too. That is the difference between potential growth and actual growth forecasts. And the Rand is appreciated roughly 7% since the last MPC, also giving some space there. They do highlight twice in the speech the fiscal risks, which is important and probably the main consideration for not cutting rates at this point, saying that the fiscal risks are still there. So overall, if we look at how the markets reacted to that, JIBAR up a little bit yesterday and today, the FRA's now not discounting any further cuts in the cycle, and the first hike coming through in exactly a year time. So the end of next year, calling for a 25 basis point hike by then, similar to the guidance of the quarterly projection model, also calling for actually 2 hikes at the end of next year of 25 basis points. But that, of course, is just a model and not necessarily what they are guiding explicitly. So from an investment point of view, what does this mean? Well, it probably indicates rates remain low where they are now for longer. And if you look at those inflation forecasts, with repo at 3.5, deposit rates on call around 3.2, inflation sitting at 3.2, 3.9, you're actually looking at negative real rates. So you really need to find an investment option that gives you that pickup, and that's available in the fixed income suite that we offer. Funds such as the core income fund, the income enhancer, and tactical income still offering good value in their running yields and in the structure of those funds, with slightly longer duration positions being held because of lower for longer outlook and steep yield curves. So even some investors looking for more bond exposure without really high yields at this point. So I think the next signal we'll be looking for is evidence that could support hikes going forward, and the timing thereof, as I say, timed for 12 months down the line. So a pretty predictable and mundane, if you like, MPC yesterday, and it now looks like we should be in for positive to calm fixed income markets for the month of December, with additional coupon flows coming into the market to be invested. So if the global economy can remain calm, then it should be a reasonably calm into 2020. Thank you very much for tuning in to the assessment of the MPC. As I say, rates kept on hold at 3.5% at a 3-2 split vote. Thank you very much and enjoy the rest of the year. Goodbye.